Hello guys, welcome to another video. So we're starting with our forecast and trade recap. Had a lot of interesting trades in the last week. The markets were really active, really trending. If you watched my last video, there was a EJ trade running and a GU trade running, which both closed as winners. So we made some nice profit on those. And here we have a trade on the euro and the US dollar. This was a loss. So let's cover all of this price action from last Wednesday. So what basically happened, let me comment on this trade. What did I like about this one? Well, what I like about it is this push up. Okay, price action was kind of flat, kind of range bound. I liked the push out, the one candle pullback, and then the continuation of the move. I did have my order on, so after this candle right here, I did have my order on to buy. After this one, it was kind of too far away for a break and retest, of course. After this one, it was okay, so I do believe I didn't. And then we started slowing down. Yeah, we started slowing down to the upside, but I no longer had an order on for a break and retest, so for a retest of this level, because it kind of moved too far, to be honest. But I was looking for a flag. A flag did eventually form, as you can see it here. So let's just draw it out. Right here, so here is our flag. First high, first low. Or sorry, it's kind of small. So first high, first low, second high, second low, and the blue candle is our entry candle. So we have an established uptrend. One candle pullback, no shift in momentum, price continues. For me, this was a no-brainer, 10 out of 10 textbook trade. Some people didn't like the slowdown on the top. For me, it was Thursday and established uptrend, clear bullish pressure. It was definitely a no-brainer. 10 out of 10 setup. Okay. So then we continued down. I was looking for a flag right here as well, like a flag plus, as we call it at Zentum Trading. It's basically an inside bar followed by an outside bar, and then need the bearish candle to enter. Unfortunately, the bearish candle broke the low, making the setup invalid. Okay, so this was no longer a valid setup. That's the reason why I didn't take it. If it was a valid setup, if the red candle formed inside of this structure, then I would have taken this trade right here. Price continues down. At this point, I didn't have my order on, to be honest, because it was just breaking and leaving wicks. I know some people had a sell limit break and retest order here. For me, this was not enough. At this point, I was maybe looking for a flag. I didn't want to take a break and retest because it was starting to show some bullish pressure up. So I would have taken a flag, but yeah, it was kind of showing a shift in momentum, and then this candle printed. So at that point, I definitely wanted to stay out of the market. It would have been like a loss. It would have taken me out for a loss. Then we started to ascend. Okay, so started ascending here, started descending. So now it's moving correctively. It's starting to range around, going from an ascending into a descending channel. I'm expecting more range-bound price action, to be honest. Okay, expecting more range-bound price action. And this is looking a bit corrective overall. So I want to see price action cleanup. I want to see a large push up or a large push to the downside. I want to see some established trends. I want to see nice momentum. Basically, something like this going up or something like this going down. Major bearish pressure. So that is what is of interest. That's about it for EU. Not seeing currently any potential. I was maybe looking for a sell setup after this bearish momentum down, but then it kind of ranged around, broke the low, retraced, so very corrective. Okay, moving on, euro and the Japanese yen. This trade is now closed. Okay, I'm gonna quickly cover it. I did examine it in the last video, but now it's closed, so I will quickly go through it, or maybe it actually closed in the last video. I'm not sure. I don't think it did. Basically, established uptrend. Very nice candles, very high probability price action. Clean close, clean close, clean close on the top. Flag formation, no selling pressure. Clean small flag. Textbook entry, 10 out of 10 setup. This was a no-brainer. Closed it for around 4.3% with a 12 pip stop loss. Okay, I put my stop loss here, price broke the high, and then in the same candle, the drop down took me out. At one point it was running like 8.8%, so it was running very nicely, but unfortunately did reverse, take me out according to our trade management rule. Okay, then it ranged around, broke the low. Nothing much was happening here, didn't look for any opportunities. There was a flag right here which was on my radar, so this was an interesting flag. Basically, pair price action was kind of, you have this larger descending, but then price ascends and gives us a push up. Now, because it was Monday, I was willing to be a bit more patient. This impulse, this momentum by itself was not really enough for me to look for a setup. I wanted to see a bit more momentum going up, okay? A bit more momentum for a Monday. If it was later in the week, Wednesdays, Thursdays, Fridays, maybe I would have considered this setup right here, this flag. But because it was early in the week, I did stay out. Okay. Price then ranged around right here. And then we got a large impulse down. I was potentially looking for a sell setup right here because I saw some nice momentum. You can compare this momentum, especially after the break, to this momentum. This seems a bit stronger. But what happened is we got a clear shift in momentum to the upside in this one large blue candle. Okay, clear shift in momentum. So now I'm being more patient. I wouldn't take a flag here. A flag is forming now. But yeah, it just would not fit the plan because of the large wick and the clear shift in momentum going up. To be honest, I'm expecting range-bound price action right here. That is my forecast. What I'm looking for, what I want to see, kind of the only scenario that would make sense to me to look for a high probability trade is for this bearish momentum to continue down, okay? And then show me a nice entry, a nice flag, or a nice break and retest. That would make sense to me, and that is something I would look for. If the price does go up, then it could potentially print a V reversal like this, give me a range, give me a push up, and then a nice setup to go long. Okay, so those are the two scenarios that I'm looking at: large momentum up or down. Aussie US dollar did not take any trades on this particular pair. Okay, I was looking for a break and retest setup here. I did cover it in the last recap, but I'm gonna do it again. Maybe I didn't cover it in the last recap. Basically, large push up, one candle pullback, not much selling pressure, price continues, nice clean close. My order was on for a break and retest, 100%. 12 pip stop loss. Very, very interested to take that. Okay. I wasn't tagged in, so price flew up without me, created an ascending on the top. I know some traders, I was looking for a reversal setup here as well, maybe if it came a bit slower. So I was looking for a bit of a slower retrace to the entry level. Okay, but I know some traders did take this setup. Now what they were seeing was basically they were seeing an ascending on the top right here, and they were seeing bearish momentum, strong bearish momentum after it, one candle pullback, and then more bearish momentum. For me, I didn't take this trade for one reason, which was this break was not enough for me. Okay, I wanted to see a bigger break. Maybe if it went just a couple of pips lower, give me a nice clean close on the bottom of this break, I would be in. Because pair price action was looking great for the Aussie US dollar. This is a pair characteristic. You can get these smaller ascending or descending channels. Okay, then you get bearish momentum, one candle pullback, price continues. And usually it just melts down as it did in this example as well, but didn't fit the plan. I wanted a bit of a bigger break. Okay, price then melts down. For anyone that took it, it would have been a really nice winning trade. I was also looking for a flag right here, but it wasn't valid. Okay, I was definitely looking for a flag because I liked the pair price action. I saw major bearish momentum. I saw a reversal from an ascending. I was looking for that bearish candle to form. Okay, but the bearish candle actually broke the low with too much momentum. So, I mean, if it didn't break the low, I would have taken the trade, but because it broke the low, it made the whole flag invalid. We need the entry candle to be inside of the most recent high low, most recent low, and the most recent high. This one was outside of it. Broke the low with force. At this point, I didn't have an order on for a break and retest. My entry would be all the way on this inside bar. I needed a slower retrace to the entry level. This was just too weak. I wasn't looking for a break and retest. We were just breaking, leaving wicks, if anyone is wondering. And then price just started going into an ascending structure. Not really a clean ascending. I would say corrective ascending, okay? Corrective ascending into a descending. Okay. I'm expecting more range-bound price action. On the Aussie US dollar, I am trading the liquidity sweep entry. So I do have an alert set for this area to see if the price can reach it and then retrace, okay? So I'm looking for this. I'm looking for some specific confluences for me to take a trade, but this area is gonna be very, very important, and I would definitely expect for the price to just tap into this area, leave a wick, and then retrace with a nice bullish candle, and then possibly go to the upside. Okay, so that is the game plan for the Aussie US dollar. Definitely currently gonna put it on the watch list because of that liquidity sweep entry, which I'm only trading for on the Aussie US dollar because, to be honest, it works the best on this currency pair. It does work on other ones as well, but Aussie US dollar definitely works the best. Okay, that's my forecast. I want to see that fake out into the lower liquidity area. Why is this a liquidity area? Because, well, you have people buying here, buying here, buying here as well. Where would they keep their stop losses? Most likely somewhere here. Okay, they're gonna put their stop losses underneath the major swing lows. This is gonna be a major low. This is gonna be a major low. This is all one area. So this area full of stop losses. Bigger players like to take out the stop losses and then reverse the price in the opposite direction. We exploit that. We look for confluences. Again, we do not just blindly take a trade. I need specific confluences to form, such as a multi-tap, which is multiple points touching that one area. It's gonna be also some major bullish pressure candles where I know a lot of people were buying, so there's a lot of stop losses here. Confluences like that, okay? I need certain confluences to line up and then I will execute on a trade. I don't just blindly buy when the market hits a liquidity area. The liquidity area needs to be clearly defined as well. So, on the watch list, moving on. Aussie Japanese Yen was very interesting last week as well. All of the pairs were very interesting, moving very much and showing some nice opportunity as well. There was almost a flag here. A flag did not form in the end. Okay, but that was on a Tuesday, so I did cover it in the last video. Then we got this very nice V reversal. So let me tell you what I was very, very interested to take. As you know, V reversals, this is a perfect example. This is a 10 out of 10. Clean V reversal, clean small range, nice push down, one candle pullback, price continues. Very strong momentum, nice close on the bottom, so left a bit of a small wick, but overall you have so many confluences. It was Friday as well, so Wednesdays, Thursdays, Fridays are the best days to be taking a trending setup. Again, a lot of confluences. First one was the clean V reversal. Second one was this large push down. Then you have the one candle pullback, no shift, and the final thing was this strong break of the low. So my order was immediately on for a nice break and retest, 12 pip stop loss, but unfortunately price did not tag me in, okay? Or actually, sorry, it left triple wicks on the bottom, so it started drastically slowing down, and then basically at that point I did remove my order. Okay, price then broke the low, retraced. Yeah, when the triple wicks formed, I removed my order because it no longer fit my plan. Triple wicks are a major warning sign. Even if price action was super good, it was too much of a warning sign for me to look for a setup. And then the rest of the week and this week price was just corrective, more flat, more range bound, okay? Going from a descending into an ascending into another descending. Usually when you see this sort of price action, you can expect more range bound price action, okay? Usually this leads into more range bound price action. What I'm looking for, my game plan is either to get large momentum down, of course, or to get Possibly a V reversal in a range. Push up, look for buy setups. Okay, possibly. I want to get sort of a V like this. See, this one is a very, very clean V reversal. Looking very, very nicely. So if that sort of a V reversal prints right here, well, then I will definitely be interested. So that's the game plan for the Aussie and the Japanese yen. Moving on to the pound and the US dollar. So this trade in the last recap was running. After the recap, it did hit a take profit. My take profit was around 1.27454. Okay, that was the take profit level. And this was like a 2R winner. This is the internal reversal entry. I'm not gonna go too deep into it. So if you want to know more about it, join zentumtrading.com. But basically, what I can tell you is this sort of formation is very likely to reverse. I have seen this happen multiple times. Push down, descending structure, another push down, and then we get our entry criteria to execute the internal reversal. As you can see, it did reverse to the upside. This entry has a nice win rate, okay? The take profit, sort of the risk to reward is not that high as in our trending entries, but the win rate is much better. So during drawdown periods, this is gonna help you to reduce that drawdown and make some profits as well. So yeah, we need those entries with a bit of a higher win rate to get us through the tough drawdown periods. It's always good to have the internal reversal entry, for example, which has like a 50 to 55% win rate, and the liquidity sweep entry as well, which is also around 50 to 55. I would say a bit lower, okay, 45 to 50% win rate for the liquidity sweep entry. But both get you through the drawdowns, and the main juice is from the trending entries. So when you see all of these large payouts on our website, that's going to be mostly from the trending entries, because those go 1 to 5, 1 to 8, 1 to 10, 1 to 25 even. We had one trade go 1 to 25, okay? So the trending entries make the most money, but these ones also make profits, and we love them because they give us a better drawdown, just a better drawdown. Okay, yeah, that was a winner. To our winner. Here I did have an order on for a break and retest buy. I did like, again, very clean V reversal range. Okay, so you have the V, you have the range, you have the large push up, one candle pullback, price continues, nice clean close on the top. Yeah, my order was definitely on. Another candle goes up, order was still on, I believe. I do think I did still have an order on. It was during the night, so my memory is not really serving me that well, but I'm sure I did have an order on because prior price action was looking very, very high probability. Then this pullback candle, at that point I definitely had an order on, because then we could have even got a slower retrace to the entry level. Unfortunately, price pulls back, breaks the high, making the trade invalid. Okay, so this was a counter trend move. We break the high and retrace, which makes the break and retest trade invalid. Okay, and maybe it was a good thing because price did reverse. So this would have been maybe a small winner, maybe a loss if I was tagged in. No one can really tell because the markets played out already. But again, maybe I saved myself a small loss in this area, but definitely this price action. So this price action was looking extremely high probability. I was definitely interested to get in on that price action. Okay, then we get a push down. Here I was interested to look for sell setups. All right. I was interested to look for sell setups. Was looking nice. Small ascending on the top, large momentum down, one candle or two candle pullback, price breaks the low with force. But then the price just went flying down without me. Okay. I did get into a trade in the end on the pound. So I did manage to get in on those break and retest I have been catching the whole week. What was good about it? Well, this momentum down. Really, really strong momentum, especially for the pound. This is great. So especially for the pound, we like the large momentum. Large momentum such as here. This is very nice, and this is even better. Major drop, major bearish pressure, push down, two candle pullback. Price clearly continues. One candle pullback, no bullish pressure, price breaks the low. The break was not that big, okay? So the break was not that big, I have to admit. With the pound, I can't tolerate it. So that's a pair characteristic of the pound, is that if the momentum is there, the break can be a bit smaller. My order was on for the sell limit. Got tagged in, price breaks the low. I reduce my risk 2 pips above the most recent high. That's our trade management rule. And then we have spread hours. We reduce our risk even more. And this was like a really small loss. I believe it was maybe a really small win. I think I made like €1 on my personal account or something crazy like that. So yeah, this was like a break-even trade, let's say. Okay, break-even trade because my stop loss was in the end 2 pips above this level. Then spread hours finished, got taken out. Unfortunately, price did end up flying down without me. So it did happen. If we managed to stay in here, according to our trade management rule, if we were not tagged out, this would have definitely been a nice winning setup. As you can see, because it went flying down, it did reverse in the end, but it would have been running some nice percent, so maybe we could have passed some funded challenges. But it happens. It's all about the probabilities playing out. If we take 10 of these trades during the year, then we will be very much in profit. Okay, some trades will go on without us, some trades will stop us out and then go without us, but there will be ones that actually take us in and we are able to make that really good percentage. So we love these setups on the pound, the nice break and retest, so nice major momentum and then nice break and retest setup. Okay, then we had an aggressive shift up. And then we range around, break the high, retrace, break the high, retrace, break the high, retrace. Kind of created an ascending, but it was really corrective. So we are more corrective, we are more flat, we are more range bound in this area. Being more patient, I'm not putting the pound on the watch list. What am I looking for? Just a large push up or a large push down, to be honest. Okay, nothing fancy. Nothing fancy, keeping it simple. Looking for this sort of momentum to the upside or this sort of momentum to the downside. This is a great example of what you need to look for on the pound. Major momentum. So leaving this one alone for now. It's looking corrective. New Zealand Japanese yen, we had some activity on this one as well. There was no opportunity here. There was this flag. I did cover it in the last video. Then we got the same sort of price action as on the Aussie Japanese yen. This was very nice, very high probability. So same story. Very clean V reversal, nice range, nice push down, one candle pullback, no shift in momentum, price breaks the low with much force. My order was definitely on for a nice break and retest setup right here. Okay, order was definitely on. I wasn't tagged in, unfortunately. So price pulled back, broke the low, making the whole setup invalid. What I can tell you is the Japanese pairs, Aussie Japanese yen, New Zealand Japanese yen, they really like the V reversals. We have had numerous major winning trades that are coming from a V reversal, either to the upside or to the downside. So they just like it for some reason. It's a pair characteristic. So now you know, if you see a V reversal, nice clean one like this is a clean one. This is also technically a V because you have similar momentum going up and down, but it's not looking clean at all. Not looking clean at all. Maybe on the lower time frames it looks cleaner, but we're looking at only the 1 hour chart. This is a clean V on the 1 hour chart. And that's what I'm looking for. Price starts descending in the end. So yeah, unfortunately we weren't tagged in. If we were, this probably would have been a nice winning trade. Okay, but it's not gonna happen every single time. We need to follow the plan, we need to stick to the rules. We cannot just leave our order on once it invalidates the whole setup. That's not how we do it. We stick to our data, we stick to our backtesting, and we know what works on a large sample size. Descending, going into an ascending. So basically, more corrective, more flat price action. When you see this sort of price action with a descending going into an ascending channel, into another descending channel, which it's doing now, you can expect a larger, wider range, okay? You can expect this to happen. And if that is the case, then you need to watch what happens in these areas full of liquidity. You need to see a clear breakout out of these areas because price can easily, although we're not trading it, it's the liquidity sweep, easily push into it and retrace. Okay, easily. What you need to do is you need to wait for nice push up, nice continuation, preferably even one more candle going up. So that will be the best sort of scenario. That's what we like to see. Okay. And that would be about it. So the only one on the watch list is the Aussie US dollar because of the liquidity sweep. Again, this week markets are range bound. This is only Wednesdays. So Wednesdays, Thursdays, Fridays is usually when the trends start. If they do, I will exploit them. But current price action is telling me markets are more flat. I'm going to exploit the range bound markets on the Aussie US dollar if it gives me an opportunity. Other than that, I'm sitting on my hands. I'm catching up on sleep as well because last week was hectic. Got no sleep basically because I was waking up during the night pretty often. That's gonna happen as well. So usually once per month, 2 times per month, you have these really active days where you want to wake up during the night, check for setups. But the rest of the month is usually pretty quiet. So that's it for this video. See you guys in the next one.